What's going on, guys? Welcome back to another episode here on Let It Grow Investing. I'm Jeff. We're going to cover all things stocks, all things investing, try to get caught up on the market, see what's happening in earnings news. We're going to look at some other investments made from some other companies and kind of get caught up with everything that is going on out there. So thank you, guys. If you are new here, please make sure you like, subscribe, and share. It definitely does help the podcast. It helps bring in some like-minded investors that like talking about similar stocks, similar things, and how to make everyone a little bit of money. So that being said, we're looking at what's going on in the market this week. This is the S&P 500. We are down slightly, but we did close the week on a positive note. We went up to about 6,700. And right now we're at 66.43, so down a bit on the week, but we did recover towards the end. So what happened? Well, we had Costco come out. And Costco went ahead and reported solid earnings and revenue. We are watching their membership. We're watching how much demand is there, and that demand has been strong. When it comes to their earnings, we are looking at revenue of around 86.2 billion. I want to say it was 86.16 billion. There we go. So yeah, really solid news there, up from 79.7 billion same quarter last year and 78.94 billion the quarter before. So a very sizable increase year over year. Over $6 billion that they actually increased in that revenue. So massive there. So we are seeing a lot of consumer demand for all things, right? We're seeing a lot of these prices continue to increase, bringing their earnings a little bit higher, or how much revenue they actually brought in. So they reported a better than expected quarter. Similar news on the AI front when it comes to Micron. If we take a look over at ticker MU, they have cited that there is more and more spend on AI. The other chips that they make, we've got Micron delivers earnings beat and strong guidance. So their DRAM and HBM outlook is actually improving margins, stronger demand across servers, PCs, and autos. So a lot going on there. That is good news for them. A couple different people saying that we have more growth in autos, and then I'm hearing from people that actually own auto dealerships that things are looking a little bit bleak. So there's a little bit of a disconnect there. I'm not too sure if it's just more chips in the cars that are being made, or if it's a case where they're actually seeing, they're building more, maybe on target for, 12 months out, 18 months out. But right now I'm hearing that auto sales is a bleak industry. A lot to do with how many vehicles were purchased 2 or 3 years ago, or at least 2 or 3 years ago. And that number or the prices that they were paying was exorbitantly high. And now when they're going to trade them, they're getting lower offers than where they thought they would be, seeing that they had to pay a dealer markup, 3 years ago. So they're underwater on a lot of these things. So there's a lot of turmoil out there when it comes to used car vehicles, used car pricing. Auction prices are strong because the dealers can't get enough inventory from simply just buying them from the people that generally trade them in, because they're just simply not there, but they still have to buy them at auction to have inventory to make money, but they aren't making enough money or enough margin, especially on cash purchases. If you're financing, they're going to make a little bit more, but if you're not financing or doing any of that, they're not making much on the way of the actual sales price. So there's a lot of different things going on there, a lot of uncertainty, but analysts says, Micron say that they are seeing rising demand in chips for automotives. So there's a lot going on, a lot under the surface as to what's up there. Price targets have been raised. That is from Tom O'Malley. Another analyst that I follow still says buy Micron stock. This one, bumped up to 195 from 175. So I'm still in this one. I told you guys I do have a covered call. That's probably going to get swept out of my account later in October, I believe. And yeah, we'll have to see what happens there. So there's a lot of uncertainty, and it really feels like the tale of two markets, right? We have that AI market, and then we have the general rest of everything. And yes, it is going up, but it does feel a lot like the Magnificent Seven or anything AI related is bringing a lot of these stocks up with them. So simply because something says AI or they're leaning into AI does not mean that they are the best of breed, right? We saw this in the dot-com era. they're starting to feel like there's a lot of kind of correlations between .com and AI, where anyone just puts AI in their name and people are buying it, right? There's a lot of speculation as to what it could be. People don't necessarily always want to buy the Nvidia because they think that it already went up too much. So they're buying, XYZ AI thinking that, oh, well, it's going to mimic what Nvidia does because they're leaning into AI. I'm here to tell you that that is not always the case. There are better operators and there's garbage operators, right? I'm not saying that all of them are bad, but I'm saying be careful, right? If they are not making money, if they're not profitable, if they don't have any kind of positive track record, you are gambling. And I know there's a lot of people that are throwing money in. We see the PEs, we see the froth. We're seeing that the S&P is getting to be in an over purchase state. So I just don't want to see people get swept away by the fact that we're buying AI stocks. It's the AI boom. We got to do it, right? And then you're buying the wrong ones, simply trying to make that 10x play. And guess what? It doesn't 10x. So now what do you do? Well, that's a tough situation. Now you're holding stocks that are worth nothing, thinking that they're going to the moon because they say AI. Don't do it. Don't do it. Buy something that you can, find the profit margins. You can find how much sales they have. You know their customer base. You know what you're getting. Don't just simply buy XYZ AI company because, it's got 7,000% of upside, but we're not even close to making any money yet. Don't do it. That's my 2 cents. You want to speculate? You can speculate. You can, always gamble on some small stocks if you think so. I'm just here to say don't put tons of percentage of your portfolio in it. If you want to, gamble with 1, 2, 5% of your portfolio, go for it. Do what you want to do. But I just can't see you guys putting 20, 30, 40% into XYZ AI, getting burned, like that happened in 2008. And then those people never get back in the market. If you've been in the market the last couple of years, you've been doing very well. We've seen, just what Costco's numbers are that we are looking at a company that has increased their revenue from 30 some billion 10 years ago to 86 billion this quarter this year, right? It is a definite money growing, system if you're in the right things. But there's a lot of companies that have gone bankrupt in that same 10-year period. So just because you're buying into the stock market does not mean you're buying into the right companies. You're not betting on the right horse. I don't even want to call it betting. I don't want to call it gambling. You're not being smart and doing your due diligence if you're just simply throwing money at anything that says AI. So that is my take on this one. Now, there are a lot of stocks that aren't AI that, kind of lean into it, right? We're seeing that. We're seeing the secondary and the tertiary markets that anything that says AI looks like it is, this beneficiary of everyone spending money on it. That's not always the case either, right? We're looking at Walmart. I am seeing some news from them that they are going to keep people on the floor as long as there's not robotic humanoids. They're going to be keeping people on the floor, right? So we're looking at some news here from Walmart. They are going to be trying to keep, we've got Amazon definitely coming after Walmart right now. We are seeing the amount of growth that Amazon has. We're seeing a lot of that, but we are definitely seeing a lot of drive to push towards AI for efficiency, for everything. But Walmart is leaning into some of it, but they are going to be having more people on the store floors to help other people. That is the stance that they are taking on it. I can't argue that. Sometimes just calling into a robotic system doesn't get you where you need to go. Sometimes calling into a human system doesn't get you where you want to go either. But they are leaning into the fact that as far as having robots on the floor, they don't necessarily want that. They're going to try to keep people employed and keep them on the store floors at least. We've got that going on. We had AstraZeneca come out. I still believe that the healthcare market is in a bit of turmoil. We are seeing some new tariffs from Trump. I do want to cover that in a second as well. We got unfazed by Trump tariffs. Big Pharma says that they are unfazed. Trump's new plan for tariffs on pharmaceuticals landed like a bomb on social media late on Thursday. Many of the world's richest drug makers say they expect to be unscathed by the new levies. So basically, here we go. Trump announced on Truth Social that brand name drugs would be tariffed at 100% starting next month, but provided a big escape hatch. unless the company is building their pharmaceutical manufacturing plant in America. So if they've broken ground, if they've started construction and they're still making it abroad, they are going to be grandfathered in if they are currently have plans to build here. So I don't really know the scope of that. Do they just simply have to buy land and start scooping up some dirt and saying, hey, we're planning on it? But you know what? There is a bunch of permits that are backlogged for 18 months or whatever that might be. Are we in the process, but we're not really serious about it? I'm not too sure. So I think a lot of people are going to be trying to dodge things like that, right? We've got cranes are rising at Novo Nordisk's U.S. manufacturing site in North Carolina, where we are halfway through a $4.1 billion expansion. So they are actively doing something, it sounds like, or at least they brought a crane in. Maybe that's all we're doing. I'm not too sure. So that's what I'm saying. There is this big kind of loophole deal where we're trying to see what that actually means. How many of these people can actually get around it? Other companies, Gilead, Regeneron, and Roche, stopped short of saying that they would be exempt, pointed to their construction of new manufacturing sites and statements sent to the Wall Street Journal. So again, we don't really necessarily know the whole story here. I do believe that a lot of these pharmaceuticals are in the crosshairs of all things government. That is a big target on their back. We've got a lot of upside that is on some of these names that we follow really closely. Eli Lilly at 724 with 24% of upside. We've got, let's take a look at Abbott. I haven't taken a look at them in a minute. About 10% of upside there. And normally they're kind of priced to perfection. They're pretty close on the button every time. AbbVie around 7% higher on upside. I've had this one for forever at this point. It's done really well for me. And again, like healthcare has not been really the shining light of great stocks that are out there right now. I think the companies are doing well, but the stock price is not, right? And that has a lot to do with what is going on in the government. United Therapeutics is a bit of an outlier right there. They just kind of keep going up. They still have around 15% of upside. And this was a big ramp from the lows back in April at probably around 280, 285 roughly. And now we're sitting at 432. So definitely one there that has done really, really well. But that seems to be the outlier of big pharma. And they're probably not even the biggest of pharma. They are, let's check the market cap there. What are they valued at? 19.6 billion compared to, say, a J&J valued at what? 432 billion there. Lilly is valued at what there? That's not what I clicked. LY, I'm gonna say 4 million. That is way incorrect. What do we got? 685 billion. Okay, so yeah, these are a little bit bigger, not quite the same company. And United Therapeutics is going to be a lot more nimble with what they have. One headline can send them up like a rocket ship, and I guess vice versa, it could send them down as well. If one drug gets pulled, that is a huge shot to them versus something like a J&J. It takes all these talc powder lawsuits to bring them down. So not quite the same company, but definitely worth mentioning that the whole healthcare system is in the crosshairs. I think there are some really good values out there, and a lot of the Mag 7 still have room to run. I'm seeing people saying that Nvidia is going to get chopped down, but I don't see it. I think there's just too much spending there. And that brings me to my next point here. What do we want to buy if the market goes south tomorrow? If the market does have a 10, 15, 20% pullback, where do we go? Where are we saving our money right now? If you're making a ton of money, maybe you want to take a little bit off the table to reinvest, right? I think at some point we get another April pullback and we want to have cash on the sidelines in order to invest in those sales. So I think that's got to be part of the conversation with yourself as to where you want your portfolio to be positioned when the market does go south. What do you want to take a little bit off the table from now? Where do you want to put it if things do go south or sideways for a while? I still think that, some of the Mag 7 plays make a lot of sense in this market. I think Amazon at 20% of upside makes a lot of sense. Apple, yeah, they're trying to do stuff. I don't really want to buy a ton of it right now. Some people saying upside, I don't see it. I think they need to do something for me before I really want to buy this one. Yes, they have cash, just flourish. They are so rich in cash that they can do a lot of things, but they need to start doing things so that we want to buy them again. That's my take. I know they have the cell phone market locked up. They got a lot of different things locked up really, really well, but I want to see some innovation out of them. So that's maybe not something that I'm looking for. Nvidia, Amazon, I'm still very bullish on those two. I think long term, they're going to be winners for years to come. I don't see that changing. Google, yeah, we've had a massive run in Alphabet stock. Maybe we'll want to see this thing pull back a little bit before we buy this one. But I do think that long term, we are probably pretty sound on buying Alphabet stock going forward. I still want to add some more AMD. If the market pulled back 20% tomorrow, AMD would be one of the ones that I would be looking to buy. Micron still would be one of the ones that I'm looking to buy. So I'm looking for the high quality companies. I'm looking for ones that are going to provide an outsized return. I still think that dividend stocks and having a dividend basket, VYM or something of the nature like that, makes a lot of sense. Like I said, AMD is in beginning innings. I really do believe that. I do believe that tech can be purchased in individual companies. I still think that the overall market probably can be purchased in individual companies as well. But when we're looking at like a high dividend ETF, an exchange traded fund, a basket of stocks, if you will, I'll take a look at the portfolio here to see what's in VYM. You are looking at Broadcom, JP Morgan, ExxonMobil, Johnson & Johnson, Walmart, Home Depot, AbbVie, Procter & Gamble, Bank of America, Chevron, right? Do I necessarily want to go out and buy every single one of these by themselves? Not really, right? Not really. I don't know on a couple of these. Oil's been a really choppy market. Exxon, I don't know that I want to buy it. Home Depot, I think that it can work. You would think with rates coming down, people doing a little bit more building, that Home Depot would work. It's a little bit expensive at the moment. I say that I haven't even really paid such close attention to this one at the moment, but it just doesn't necessarily feel like the stock I want to buy hand over fist right now. Now, Broadcom, I still think you can own that. Yes, it's had a lot of run lately. AbbVie, yes, there's a little bit of upside there. Procter and Gamble, I'm not in love with. Bank of America has already had a pretty solid run in the past year, right? I think we're in the 50s, probably from like 30 something. That has been pretty solid. Do I want to continue buying? And again, with rates coming down, you would think, yeah, well, then there's going to be more lending. But it doesn't really seem the same, right? It looks like the 30-year mortgage or those rates have gone up as the Fed funds rate is actually coming down, which is kind of a tricky situation as well. What does that mean, and where does everything go from here? So there's a lot of unknowns, right? So could we simply buy this index? This represents 26% of the assets in this fund. Yeah, we could. But I would prefer owning the stocks that you have really done research on. You really like this individual name. If you just want a dollar cost average into VYM, by all means, go for it. You can continually build this over the next 10, 15, 20 years, go into retirement with significant amount of dividends coming in because they're all high dividend stocks or higher dividend stocks than most of everything else in the S&P. And it's going to continue paying you a rising dividend yield for most of these names, right? They look to increase their dividend payout or their dividend that they can actually pay, maybe not the payout ratio per se, but they are going to be paying you a rising dividend over time. So, yes, you can buy a basket of, the VOO, which is going to be the S&P 500. You can buy VYM, which is going to be the high dividend yield index, which is only getting you around 2.5%. There are going to be stocks in there that are going to be paying higher, right? I'm sure we could get something like a VZ, a Verizon, that's going to be paying you 6.33%. We could look at something like UPS, I know we've got a lot of problems there, but I'm still looking to add a little bit here with this dividend closer to 8%. So there are stocks that we can, buy for heavier dividends, but there are risks with those. Buying simply one basket of them can give you a little bit more, diversification, if you will. You're going to have less volatility by buying that basket, but you might not have the same upside. Well, you're not going to have the same upside by buying something that is completely undervalued at this given point in time. So that's what I got there. We've got, just multiple ways to play this market. Yes, I think take a little bit off the table. If you're up, big money on something, there's nothing wrong with taking a little bit off the table and, having that for the next buying opportunity that we see coming in the market. Intel, we are seeing some deals coming out there on some of these stocks. Intel, we had a big gain this week. Who was trying to buy into Intel? I should probably have all this ready for you guys. But you know what? It's been a busy week for me. We've got soccer 5 nights a week. I've got a birthday kid in the house. So we had that. We've got I just bought a new car. So me and my dad actually drove up to Pittsburgh and picked up a new car and drove it back. And we talked a lot about the stock market, believe it or not. And we talked about how it's changed over the course of time when he started buying stocks, and the fact that you had to buy them directly with the company. You had to, send in your share, or send in your check and buy your shares, or just the fact that you didn't have this long window, or you didn't have information at your fingertips, right? They didn't have Google to quickly research, what the stock was looking like. You had to do a lot of digging. And you also didn't have price, targets and things like that. We didn't know where that price was on any given day until you checked maybe the newspaper the next day and got some kind of insight as to what was going on in the market. So yes, Intel, sorry, sidebar, right? I've just been busy. They've been working to find a funding for them to basically take their stock to the next level, to get back on track, to kind of be a threat to AMD. And I think Nvidia was investing in Intel. That was part of the talk. So Intel, I still don't really like the play. I'd rather be in something that is best of breed, and I don't see them as best of breed. So for that reason, I'm out, as they might say on Shark Tank. But Marvell, I do like Marvell. EA, they're trying to go private. I don't really know any of these other names. Oil prices surge, but that has been, a crazy market over there. So yes, right now, if I'm looking at anything, it would be AI, best of breed AI, Nvidia, AMD, Micron, Broadcom. I'm probably not even looking at Qualcomm at the moment. We haven't talked about them in quite some time. I would be looking at some nuclear stocks. I really think that nuclear could be the way forward in this energy race, right? All these data centers, I do think that something like nuclear energy could be on that small scale, modular, SMR, Oklo. We're talking about those names. I think they make sense. I still believe that we can buy healthcare right now. So what is it? The XLV healthcare. This would be another way to get into healthcare. If you're simply looking to buy the healthcare and you think that all of them are undervalued, something like buying an XLV, which is the Sector Spider Healthcare Fund, could be a great way to do just that. You're buying Lilly, you're buying Johnson, AbbVie, UNH, Abbott, Merck, Thermo Fisher, ISRG, you're buying Boston Scientific and Amgen, all in one basket. So now simply putting $200, $500, whatever you're willing to invest can buy you all these stocks that are generally all trading fairly reasonable right now. Put them all into one basket. So now you're buying something that is undervalued all at one time, rather than simply just buying VYM or VOO, where a lot of those stocks are overvalued, in my opinion. Now you're buying a basket of stocks that is undervalued and hasn't performed as well as the rest of the S&P in 2025. So that is another way to play it. So for me, it would probably be high performing, best of breed tech and AI. We're looking at possibly nuclear or other energy utilities that make sense. I would be looking at healthcare right now. That is where I'm looking. I know there's other companies out there that make a lot of sense. I know that consumer packaged goods are kind of in the crosshairs too. All things high fructose corn syrup, all things with tons of sugar, things that aren't so great for us. Those are all in the crosshairs as well. So I'm not necessarily running out to buy a Coca-Cola or a Pepsi right now, even though they might make sense for yours. They might not make sense for me right now. So I might be looking elsewhere, but that's what I've got on my radar. That's what I'm taking a look at. We talked in Intel. We talked about the funding they're looking for. We talked about, did we talk about OpenAI and Nvidia? They are, Nvidia's trying to throw about 100 billion their way, I believe is that number, for more AI, promise going forward as to what Nvidia can do in that market. I mean, they're just going to keep on going. They're just going to keep spending and growing until they are the king on the top of the hill of the AI arms race. And I think that's where we're at right now, is Nvidia just wants to own that space and be the best of the best. We talk Costco, Micron, AstraZeneca. We talk tariffs. I know that we've got some tariffs there on pharmaceuticals. I know there's other things that just came out as well on this past Monday from Trump. There's a lot going on there, guys. So if you are looking at a stock, make sure that they aren't in the tariff crosshairs. Make sure they're not in the FDA crosshairs. There is a lot of things to avoid out there just based on what the political landscape looks like and what it could potentially mean for your hard-earned money that you're looking to invest in this market. So I think that's what I've got on that front. If I'm buying something this week, what did we buy this past week? Was it AMD? Boo, I don't even remember what I bought. That's probably not best story for you guys, but man, my mind is in 4,000 different places, and I've got to wrap this one up and get to a soccer game here in about 20 minutes. So we're going to try to do this, edit, get it out, and hopefully help you guys out in the market. So Costco, man, I like Costco. What's the upside here? Did we have a bunch of price raises? I really do like the name. 18% on Costco. That is pretty awesome. I know we saw similar numbers from Amazon. We saw similar numbers from Nvidia. Costco tends to make sense to me. I think that if the market does slow down, we aren't necessarily completely overvalued like some of these other stocks might be. Not saying Amazon or Nvidia, but a lot of tech is overvalued. If the NASDAQ does sell off, I think it's going to pull down these other stocks with them. Costco, they kind of lead that space, right? So I don't know that they're going to get pulled down if Walmart has a bad read. I think that's probably going to be a good thing for Costco. So I'm going to lean on them this week. I'm going to throw $200 of my money into the investing challenge, which is on Webull. And if you don't have an account started, feel free to use my link in the description to get your Webull account started. You get some free shares. I get some free shares. Everyone wins. Thank you guys for doing that. That definitely helps me out. And that's one of the ways you can help support the podcast by simply clicking my link and getting some free shares. So thanks for that. Someone really needs to get a hold of me. So with that being said, I'm going to be buying Costco, and you guys can buy the same on Webull. So that's all the time that I got for you guys this week. Thank you very much for stopping by. Hopefully this has helped you out. If it has, please feel free to share it with someone that's a like-minded investor that just kind of wants the news out there without all the hype, without all the, if you don't buy this within the next 36 hours, you're going to be broke. You're never going to be a millionaire type stories. And I'm just trying to bring some facts to you on what the market's going to bring to us. So thank you guys, and I will catch you next time. Take care.